Okay, hi everyone. So today, my group will be presenting on the Chevron Corp's $13.7 billion acquisition of Noble Energy. So with me today are Mia and Nikola, and I'm Xinrui. So next slide, please. All right, some overview of the target and acquirer. The acquirer is Chevron Corporation, which is an oil super major based in the United States. It has operations in countries all around the world, and it is primarily involved in producing and transporting crude oil and natural gas. So Chevron also refines, markets, and distributes fuels, as well as being involved in chemical and mining operations, power generation, and energy services. It has a market capitalization of $172 billion and was advised by Credit Suisse on this deal. Now, the target is Noble Energy, an independent energy exploration and production company. The company explores for and produces crude oil, natural gas, and natural gas liquids. So it primarily operates in the continental United States and also in the Gulf of Mexico with key international operations offshore of Israel and in West Africa. It was advised by JP Morgan on this deal. Uh, on this slide, you can see the market performance of both of these companies since August 2018. Both of these companies have performed poorly, especially since the start of the pandemic. But Chevron has been in a relatively better position than Noble. Next slide, please. Yep.
On the day the deal was announced, 20th of July 2020, it was the first transaction announced in the oil and gas industry since the beginning of the COVID-19 pandemic. It was later completed on the 5th of October with an all-stock financing of the transaction, where one Noble share converted to approximately 0.1 Chevron share. In total, Chevron will issue approximately 58 million shares with a total transaction value of $13.7 billion US, of which the implied equity value is $5 billion. Now, for the buyer rationale, there are multiple factors that Chevron considered for this acquisition. First one included the fact that these companies have a complementary portfolio. Noble Energy assets will now strengthen Chevron's position in the Permian Basin and DJ Basin. Therefore, Chevron will be provided with low-cost and proved reserves that will enhance its upstream portfolio. The effect of this complementary portfolio can be seen in the fact that Chevron was positioned as the second U.S. shale producer after the acquisition took place. Leading on from this, we will see massive cost benefits. The aforementioned reserves will add 18% to Chevron's year-end 2019 reserves at an average acquisition cost of less than $5 million per barrel of oil, and almost $7 billion per barrel of oil, and almost barrels for less than $1.50 each. Furthermore, there are additional massive synergy cost savings totaling approximately $300 million before tax. Moreover, compared to the Anadarko bid, the Chevron participated back in 2019, which would have set Chevron back $60 billion. It acquired a company with similar complementary asset portfolio for the fraction of that price at $13.7 billion. Chevron also acquired Noble Energy at the time where it was only trading for $10.38 per share, whereas 15 months prior to that would amount $27 per share. With this acquisition, Chevron also gains international exposure with new assets in Israel and particularly strong growth opportunities in Equatorial Guinea. Another important benefit that came with this acquisition was that Chevron proved the strength of its balance sheet to its shareholders and thus reassured them, especially considering that at that time, oil and gas industry was decaying and the shareholders weren't sure about the future of the company. And now, as far for the risks and uncertainties, the most evident one is coming from COVID-19 pandemic. It hit the oil and gas industry particularly hard, with both Chevron and Noble Energy having traded down alongside the oil prices. Chevron was especially hit as it reported the second quarter losses of $8.3 million, which is actually Chevron's largest quarterly loss in the last 30 years. Just to put that the scale of losses in perspective, only year before that, in 2019, a quarter report, Chevron had profits of $4.3 billion. Part of the losses came from assets due to the falling commodities prices. Chevron lost additional $2.6 billion as it had to remove the value of its Venezuela operations after they were frozen due to the US sanctions. And furthermore, it had to cover the severance pay cost for 6,000 jobs, which actually represents 13% of its workforce that were cut due to the restructuring of its global operations. Another risk that needs to be considered comes from the Noble Energy shareholders. While 89% of them voted in favor of the deal, only 60% of them voted for the merger-related executive payouts. This means that large proportion of Noble Energy shareholders are questioning whether the executive payouts are excessive and best use of company capital. As part of the acquisition, Chevron will also take over Noble Energy's assets located in Israel. This, however, could cause problems with other countries in the Middle East, as Chevron runs operations in countries such as Saudi Arabia, Iraq, and Qatar. It faces the risk of being boycotted by those countries for having assets in Israel. Therefore, due to the political climate in that region and uncertainties that it brings, it is still unsure whether Chevron will hold on to the Israeli assets or sell them off.
So what's happening with Chevron since the acquisition? So since the acquisition, we've seen a steady growth in the share price. Although due to the impact of the COVID-19 pandemic, the share price still remains over 20% lower than of the 1st of January 2020, so a year prior. They've also, in the same month as the acquisition closed, they announced the divestiture of their Appalachian natural gas businesses, which closed very quickly and had done so by December 2020, commanding a sale price of $735 million, offsetting some of the losses that Chevron had seen throughout 2020. They've also continued to honor their dividend commitments to their shareholders. Over 2020 in total, they paid out over $9.7 billion, where their $1.29 dividend announced in November continues their trend of increasing the dividend payment through payment to payment. And the dividend payments remain at the forefront of their financial priorities. Finally, Chevron Corp has also been very keen to pursue a renewable energy drive, having purchased wind farms in their Permian Basin assets, embarked on a solar project in California, and also have taken many initiatives in their downstream operations. Looking over to the commentary, both David Stover, Noble Energy's chairman and CEO, and Mike Wirth, Chevron's chairman of the board and CEO, have been very happy with the acquisition, with David Stover describing Chevron as a global diversified energy leader, and Mike Wirth stating, Noble's high quality assets strengthen our portfolio and are expected to increase the long-term value of our company. Looking ahead, we can see both upstream and downstream operations growing in the Q1 of 2020, and looking out to the full year of 2021, upstream and corporate operations are looking to grow also. In terms of the industry, as we move away from the pandemic, we're seeing large-scale consolidation within this sector. Obviously, Chevron was the first company with its acquisition of Noble Energy to start this trend of consolidation, but we're seeing it increasingly so as the industry recovers. It's also very clear that investors are looking towards more sustainable opportunities, especially given the new American administration very quickly joining or rejoining the Paris Climate Agreement. In order to support this energy transition, Chevron have embarked on several initiatives, which focus on lower carbon intensity, increased renewables, and to target breakthrough technologies. And most of the initiatives that they've currently announced and are currently working on are expected to come into place between now and 2022.
Right. So on this slide, we have some comparison of the premiums paid by the acquirer in several of the recent transactions in the energy industry. Leading the way, we have Occidental with its acquisition of Anadarko with a premium of over 57%. Now, this was the very same deal that Chevron was targeting, and they would have similarly paid a value of around $60 billion had they proceeded with the deal. However, after the onset of the COVID pandemic, we can see that the premiums paid by the acquirer dropped significantly to a level of below 15%. In this deal, Chevron paid a premium of 12% in its acquisition, which is broadly in line with the premiums paid in other mergers since the pandemic. That's all for this presentation. Thank you.